So Hourglass is the software we use. You can only have it as a member benefit with IM Mastery Academy. And the software is phenomenal. It's literally worth millions of dollars in comparison to what the banks use to trade your money. Now, we won't get into those details now, but follow me for a second. Despite the confusion that it may appear to be, especially for those who are brand new, those who are not even part of the service, but let's focus on one thing at a time. All right. The alert panel gives you the opportunity to select a currency pair in its analysis at a glance. I'm going to say that again. The alert panel gives you the ability to select one currency pair in its analysis. Okay. So, first thing you need to understand is every trade you're going to be trading something, all right, like a stock, right? So the currency pair is what we trade in forex or foreign exchange, our currency markets. So it consists of three letters, uh EUR, and then the second set, that's why it's called a pair, of three more letters, AUD. So this represents the euro and the Australian dollar. Okay, the euro and the Australian dollar. So the currency pair we're looking at is EUR AUD. Let's look to the right. See, it's right here. It confirms it on the left. All right. So this currency pair is CHF JPY. What does that mean? Well, this is the Swiss franc and the Japanese yen. So there's some prerequisites as far as understanding how currencies work and its exchange rate. We won't get into that now. We want to make this simple, and I'm going to show you how we're going to do that. So the first thing we do, we're going to be calling out currency pairs, and that's what we're looking at when we're calling out. So let's say we call out the URAUD. Once we select that, it will become active on our graphical representation. Now, you don't have to understand what all these colors, lines, and everything means. Let's focus on one simple strategy. The simple strategy is 5 greens or 5 reds. So if you remember in the currency strength video, we see what currencies are strong and what currencies are weak. And so in this example, you see EUR is at a 70, right here on the far right. AUD is at a 31. So which one's stronger? EUR is stronger, and it's on top, right? EUR is on top, AUD is on the bottom. What this means is that there's a uptrend because the one on top is stronger. What does it mean when the one on bottom is stronger? Well, that's a downtrend in most cases. So uptrend, the currency on top is stronger. Downtrend, currency on the bottom is stronger. Got it? Good. The second thing you want to understand is you want to trade with the trend. So if the currency is stronger on top, you only want to take what we call call orders. Call orders is mean you're placing a trade with the intent to make a profit from the increase of that exchange rate. Again, the call option is you placing a trade with the intent to make a profit when the exchange rate increases. Okay, that's uptrend. So vice versa, the downtrend, you'll be placing a put option. Put means you want to profit from the decrease of the exchange rate. All right. So for this example, EUR AUD, EUR is stronger, so we would want to place a call option with the intent for this entry price or the exchange rate to increase from this number. And to be quite honest with you, it doesn't matter how much it increases by. That's the cool part about what we do. Okay. So, first step is to identify the stronger currency in the pair. Once you identify it, you determine whether it's an uptrend or a downtrend. All right, just that simple. So in this, again, EUR AUD, that's the currency pair. The strength is 70 and 31, right? EUR is on top. That would mean what? There's an uptrend that we're anticipating. Okay. So what happens is this software will give you a corresponding arrow when the algorithm sees that it's moving upwards within a 5-minute period. So this alert panel refreshes manually or automatically every 5 minutes, and it will give you an arrow, as you can see here, that it's saying, hey, this is a good time or it's a higher probability of you taking advantage of that currency shift or change. So step one, again, identify the currency strengths. Then you identify the direction. So this will be an uptrend, right? Now, the corresponding element is this. If it's an uptrend, then you can confirm it by this thick line in the middle. There's a red line, then it turns green. Green is what you want when it's the uptrend. If it's an uptrend, you want green, right? The one on top is stronger, uptrend, you want a corresponding green. So now our focus is 5 greens. Got it? 5 greens. So EUR, AUD, currency pair. The EUR is stronger, 70 versus 31. It's on top. We want an uptrend. The confirmation is a green moving average. That's what this thick green line is in the middle of the graph. Okay. So now we're looking for 5 greens. Guess what? We got our first one. This is the first green, the moving average. Second green we want is that corresponding arrow. Now, is that arrow red or green? It's definitely red, right? We will want a green arrow before we move to the next step. That makes sense? So the green arrow lets us know that it's a higher probability of going up within that 5-minute period. Cool? Right. So that's the next green that we look for. The third green that we look for is what we call support and resistance. Now, you notice these red short lines. At the bottom of them, below them, are green short lines. You see that? Every several candlesticks has a green line and a red line. So the green line will be where that next color identified needs to be. So first one is the moving average, then the arrow, then the support or resistance. In this case, we look for green. It's going to be the bottom one, which is support. Okay. So what we're looking for price to be on or very near this green line. Well, what does that look like? See right here? On or near this green line. This price touches this green line right here. Price touches this green line right here. Price touches this green line. So the next color we want price to be on that green line. That's our third green. The fourth green, we will want this gray line to be at the bottom of this graph. We call this the stochastic indicator. All right. You don't have to understand why it's called that. You just need to know that that gray line needs to be on that green line. Got it? Just like right here. The gray line meets the green line. Preferably, you want that line to breach the green line, start to make its way back up, preferably. Sometimes you can get in right when it touches, and typically within 5 minutes, it turns itself around. Okay. The fifth green line you want is the graph below. You see it's 2 green lines here. There's 2 different indicators. This is the RSI. RSI, relative strength index. Again, that's not relevant. You just want to know that that gray line also breaches or touches this green line. Okay. So let's back up and move forward one more time. First thing you do, you have your software, right? Hourglass. We're going to use market trap strategy, and it's going to look like this. First thing we do, we identify the currency strengths. We can use our currency strengths website, or you can use what's on the alert panel. Identify which one's stronger, top or the bottom, right? The top is stronger, you are looking for uptrends. The bottom stronger, you're looking for downtrends. Uptrends, you'll be placing call options. Downtrends, put options. So now that you know what direction you're anticipating the market to move in, you should know what color that corresponds to. The uptrends are green, downtrends are red. First color, a confirmation, is this moving average. number one. Second confirmation is the arrow. Okay, that's not green, so we wouldn't move forward with this trade. It's in red, right? But when it turns green, the second confirmation has been made. The third confirmation is the support or resistance, right? Green is support, red is resistance. You can say floor or ceiling, doesn't matter. You want current price. Current price will be this blue dotted line and this blue square. You will want price to be near or on that green support. Okay, number three. So number four is the stochastic. Green line, red line. You want price, which is this gray line, or the indicator, to be on or near the green line, preferably crossed over. Crossed over means reached and turning around, crossed over, all right, just like you see here. And then the fifth one would be the RSI indicator, showing that it breached the green line again or touched it and is making its way back up. So knowing what the perfect scenario looks like, there's a term called back testing. The back testing simply means you can take a snapshot at what it looks like when everything is in alignment, when everything is confirmed, when everything looks exactly like it's supposed to be, and how the market played out. All right. So we won't get into that video now. We'll have a different video for that. This is what we call the market trap strategy using the Hourglass software that's a part of IM Mastery Academy services. Okay. Thank you, thank you, thank you. Hopefully, if I lost you anywhere, just replay the video. Watch it over and over and over again. Now, there's one more tip to this strategy working better for you. All right. Every 15 minutes, the market shifts a little bit. All right. It spikes and it shifts. So this strategy works best at the top of an hour, at the 30-minute mark, and at the 45-minute mark. Not so much at the 15-minute mark. What that means is if it's 7 o'clock, if everything is in alignment, you got your 4 or 5 greens or 4 or 5 reds, and it's the top of the hour, you're in a good position. If it's 15 minutes after the hour, like 7:15, it's not best position for you. I'm not saying you can't win, but the probability decreases based on that time frame. Again, at 7:30, 30 minutes after the hour, and 45 minutes after the hour, you have the opportunity to have an increased probability of having a profit. Each trade on your broker will last 3 minutes, or you want to set your broker for this trade to be a 3-minute trade. Okay. So that's pretty much the strategy in a nutshell. I know I was a little more long-winded. I wanted to make sure you understood it. I wanted to go over it over and over again. And last but not least, ladies and gentlemen, watch this video over and over again so you can gain clarity. Now, as you're a part of our free trial or live session, we're going to go over this strategy on the live market. Okay, this market is not live, it's a screenshot, but we're going to go over this strategy in the live market and look at different currency pairs. Thank you for your time and your attention.